All right, guys, welcome. Tonight, we want to share with you a story of how Hope, humbug me, and here in Discord, was able to basically overcome what doesn't work for her and apply what works through options trading. In the beginning, she's been with us for a while, and she tried out scalping and she was doing okay with that, but there was some challenges along the way, and we introduced her to the options side, and seems like she's doing really well at that. And I wanted to have her speak tonight on her experience and how that is working out for her. And so, Hope,
Yes.
welcome. Um, Tell everybody here how you're doing, how you transition from scalping to now option trading, and how you're really handling this transition.
Well, there, I just turned my camera on. Y'all can see me or not.
Oh, okay. Special.
Hey, if it works.
Okay. Let me see video.
No,
No, nope.
it's giving me, it's being stupid. It's not giving me the right camera.
Okay.
It's wanting to do the virtual camera instead of my real camera. I don't know why it does
Okay.
this sometimes. Anyway,
Well,
I guess I won't do that.
okay.
So, yeah,
So
I started w-
so
with
tell us
TJ.
about you first.
Well, now I want to start here first. I
Okay.
started with TJ after going out on a trip because he was telling me he was trading, and I'm like, yeah, trading's bullshit. Because my daddy went and spent his entire inheritance in a matter of months trading on the stock market, lost everything. So I didn't have a good opinion of it. And then he showed me what he was doing, and I'm like, what, seriously? That's it? I can do that. Right? So, like anybody else, I get all excited and I'm doing really good on my paper trades. I'm like, yeah. And then I start the live trading and like I have really good days and then I would have really shit days. And my really shit days were because I have PTSD and CPTSD, which is from childhood stuff. And when I'm trading, it activates a lot of that fear because we grew up poor enough that like when we got commodities once a quarter, we were super excited because we got something more than oatmeal and beans. Okay. So like that money part triggers a huge fear in me. And TJ's even been with me on some days when I'm in a trade and all of a sudden it'll just like come out of nowhere, go against me, and like I'm short of breath, my vision's graying out, full panic attack, and so it's been super challenging for me. It's not about being able to read the charts or anything like that. I'm good at that. It's the controlling the emotions part. And then there's the other part, which is that I'm very stubborn and like to hang on to things longer than I should.
Hmm.
So I was trying to overcome those things because I was ready to be done with trading because I was just like I can't seem to get past this. And started um talking about the options with Brian because Mr. Laid Back over there. He was super helpful. Um Talked to me about what he does. And then I started looking into it because it seemed like that would help me control some of my fear and some of my stubbornness at the same time because options, while they still move quickly and I still scalp in and out on those, I have a preset loss. So if I stubborn myself out of a win, then the most I can lose is whatever option I took. So then my next step, of course, is like learning to like stop stubborning myself out of the win once I got better at that. And so I've been being much more consistent, um, because I had to think about what triggers me. So I don't pay attention to like their percentages or anything like that. I'm just looking for going to is it going to hit my key levels? If it hits my key levels, I start taking profit or I get out. I don't. I don't look at, oh, well, this percentage or oh, I made this money because that triggers me into a position where I get stupid.
Hmm.
Eventually, I'm sure that will change. But at this point, that's what I'm doing. That's the big difference.
Right. So and so the option stuff has been very helpful. So I guess kind of share like when you were scalping with me, like what was the volatility like in compared to now? And then if you were to compare, volatility back then when you were scalping versus this option side, what would you say that you carried over or learning part from the scalping and transitioning over to options? What was the big difference for you?
The big difference, the big difference was a couple of things. One would be acknowledging that I don't know if a trade will work out. Every trade I make, I don't know if it's going to work.
Hmm.
Instead of like, it's going to work, it's going to work, it's going to work.
Right.
Um, and then once I got a better handle on that, then really tightening up my stop losses.
Hmm.
So, like, my favorite thing is I love, like, doji candles. Those are my favorite. I use the doji, um, because for those of you who don't know, a doji candle is the one when it's an indecision candle. It's where the buyers and the sellers are fighting, and so you've got long wicks on either side of a short body. And so what that tells me is that that's a channel right there where there's gonna be a fight. So I use that to set my stop, at the top of the wick. That's my stop for a short. Because if it's gonna go past that, then most likely it's gonna continue to go up. And then I do the same if I'm going long, I use the bottom of the wick. That's my stop. That's my favorite thing that I like to do currently.
Right,
So
right.
it's like it's still using so I'm using that plus everything that I've learned about, the general trend and the watching and like what time things start to make the change. Like we all know, you know, first thing in the morning it goes wild and then it just settles down usually.
Hmm. So
So
it sounds like when you were scalping basically that, it was a fast-paced, high-intense type of trading, and it was basically it's overwhelming, of course, for anybody, is overwhelming for me as well. But you found that, you know, going through transitioning to options, like with scalping, you're like we're in and out in minutes, right? We're like, we already determine our, you know, resistance and support and exit price and whatnot, but when it does go against you, it's very fast. But with
right.
options, it sounds like you sit there and you go and you have this game plan and you're like, here's my entry, right? Price, strike price, here's my expiration, and here's how much I'm willing to lose. And in
Right.
that process, you found that this was more soothing for you based on, how you react to things.
Yeah.
And with that, but do you feel like what you've learned from scalping in a faster pace environment has helped you calm things down and see things more in a slower pace in the option side? Do you feel like identifying support, resistance, volumes, and using all your indicators in a fast pace? Now you have all those knowledge, and then you used it with the option, and you feel like everything is like slow motion, and you're like, oh,
No, I don't feel like it's slow motion. But for me, what it is, it's not any slower because I'm still in and out usually the same day or the next day
mm-hmm,
of my position. The difference is that I take all everything that I've learned in scalping and what the options does is it allows me to give time for it to develop so
mm-hmm,
that I'm not immediately going, oh God, I'm losing money. It's like I already know, it's already there. This is how much I can possibly lose. Instead of, so when I take trades, I take the same like dollar amount. It doesn't matter how many contracts. I'm looking between 1,000 to $1,500.
mm-hmm,
So I know that that's the most I can lose versus when I was scalping, I've lost, 6 grand in one trade, and you're just like, "Oh, shit,"
Yeah. And
And so that fear is constant.
yeah, and you don't know where the end of it is.
Right.
Right.
Whereas taking that fear away just allows me to have the patience I need to let it develop, and then I like to just, like I like it best if I can take 3 to 5 positions
Hmm.
and then just, like, scale out of those, and then at the end, I can let the last one just run because I've already paid for everything.
Right.
I really have so much less stress.
That's awesome. So share with everybody how well have you how well are you doing now in comparison to when you were scalping and now option trading this month. Give everybody a quick little background how you were doing on scalping back then and how you're doing with options today.
Well, scalping, I kept losing more than I won as
Hmm.
far as dollar amount goes. Like,
Hmm.
number of trades, like, I won more often than not when I was scalping, but because of the fear and the stubbornness, I would then lose more than I gained.
Hmm.
Whereas with the options, that's not happening, and if you ask me how much money, I don't know, and I purposely don't know, and I'm not gonna look.
Yeah, just green in general, win rate
All I
ratio
care. So, until today, and today was one of those days where my tools let me down because DOS,
was lagging and
well, it
glitching.
wasn't lagging, it was complete the whole option chains for
Oh,
everything
right.
was gone.
Yep, I remember that.
So, like, until today, like, I've had 1 red day, and it was, like, $20 this month.
So it was very well controlled, even with the technical difficulties with platform. You were still managed to, mitigate your risk. And what was your process on that to try to stay calm, do your process, and how do you handle these issues?
Oh, like, when your platform goes down? I
Yes,
mean,
and you're in a trade.
I was not calm, let's but I called the broker, and I put in, my orders over the phone,
Hmm.
and they were able because it wasn't, something else, the broker could go direct on and do it even though I was having technical difficulties.
Right. So basically
So
setting up your
so I was
stop
able to get
losses.
out of most everything. I mean, when I said $20, I meant the one day this month until today. Today was a bad day, but, that was a $1,200 day today.
Yeah.
But
So,
that was my max loss. We were already there by the time I got everything together. So,
right. So that's awesome. So sounds like you're doing pretty good transitioning over to options. You have the process down, and share with everybody like what's your background and why did you choose to jump into this after, you share your story that, your father lost, all the money and, you were gonna not touch trading, but changing your belief into being convinced that, hey, there's something here in trading that I can really make something of. So share your background and then your outlook into trading.
well, my background is that I've I've done a little of everything. I have a degree in political science, so I've always been interested in economics and all that stuff. Um, and always thought the game was rigged. And then TJ basically was showing me, yeah, the game's rigged. It's fine. You can still press a button, make the money. And at that point, like, I'm currently a real estate agent and flipping, and I was done. I really wanted to be done flipping and with being a real estate agent. It's exhausting. I want to have a little fun. I'm in my 50s now, and I want to, like, not be running balls to the wall till I'm in the grave.
Yep, I know how you feel about the real estate game. It's a lot of hours and hustle, and we can all relate to a lot of the people here are investors in real estate background as well. Um, for you to really see the trading opportunity, what was the mindset you had to carry and then to also continue on? Because obviously in the beginning you were like taking some losses and you were like, oh my God, this is not cool, and all the anxiety. What did you do to kind of persist in moving forward versus most people in this game like take some losses, take a beating, right? Because they're so antsy about making money. But then that's what everybody's expectation, and that's natural to have. Everybody wants to make money, right? We're all in this to make money. But for you to take some beating and losses and transition into the trader you are now, that you pushed through that, right? What did you do outside of trading that kept you going forward?
Well, I'm a stubborn bitch. For those of you who have not met me yet, I totally am very stubborn. And I mean, I was wholly convinced that if it can be done, I can do it. And so I studied my ass off. You know, I've pay attention. I'm in the market every single day, whether I was trading or not. I'm over there watching Humble Trader and Maple Stacks and like everybody, talking to everybody, doing all the things, and just trying. Like I well, it's like I do everything. I do everything. It's either all or nothing, and I just kind of threw my all or nothing into the stock market because I do see it. I see it. It's right there. People are making a living doing this. I'm not looking to be a billionaire. I'm just looking to like at least make the income that I make being a real estate agent, and I know I can do better than that as well.
Yep. So after seeing all the possibilities, following people online that are also committed to this game, now you have focused in, okay, how do I acquire the skills to get to where I need to go? And you've continued to basically make that as part of your routine to like read, research, read books, listen to podcasts or YouTube videos, and that has keep you in track with what your goal is basically, right? Your belief that this trading can supplement your income or exceed your income in real estate, and
Correct.
plus, your buying time, right?
Yeah.
Awesome, awesome. So as you can see, guys, it's time. Let time, I keep saying this, let time be on your side. You're gonna fall, you're gonna get punched in the face. That's what it feels like. When you take a loss, you feel like you want to crawl up into a ball and tell yourself that this trading thing is not for me. All those, you know, talk in your head is gonna go through, and you will experience that. But I just want to share the story with Hope that, you know, she goes through it. I went through it. All the traders here is going through it and learning. But at the end of the day, if you look into further out, right, what is everybody else's roadmap? They went through the struggles, the learning process, to
Mhm.
consistency, to building routine, and now they're saying they're seeing profits. The profits will come after you do the routine, the discipline, the studying, right? And the cool thing about this is there's no cap on how much you can take from the market every single day, right? You guys are all here excited to see my, P&L posts in on social media. The hours behind that I put in to get these kind of numbers is ridiculous. There's so much commitment that my eyes would feel like it wants to cry because I stare at a screen all day. But I know that I have to put in the time. I have to put in the time to get where I will need to be. And if whatever the number figure that you have in your mind that you need to achieve, just know you can accomplish that, but you got to put in the time and understanding this game, understanding your charts, the patterns, the, you know, stock market and whatnot. Time
Mm.
will get you there. Not today, not next month, not possibly next year, but just know that that is what you're working towards. Just like in any career that you're in right now, it took time for you to develop whatever skills you have now, but you didn't think about, the sacrifice, the work that you had to put in. You just went and did it. And you have to apply that same mindset here in trading that you need to put in the time, right? And if you do that, you'll start seeing, I mean, Alex himself as well. I mean, he sees the things that I see now, and that's exactly what makes me like driven to even teach and share with you guys is when you guys start talking and calling out the plays before I even see it, right? And that is music to my ear that you guys are putting this to work and you guys are getting closer to your goals, right? So appreciate your hope, appreciate you guys, everybody. And now, thanks,
Yeah,
Hope. Thank you for
you're
sharing your
welcome.
story.
You're welcome.
All right. So, also, what I want to share with you guys tonight is how to identify an A plus setup. We've talked about this in the past that you need to, whenever you're trading, you need to grade a chart pattern, a setup, right? You're getting in for a reason. What is that reason? And what is, if you have to put a grade on it from, you know, ABC, what would it be? And in this particular example, this was an A plus setup based on all the data and experience I've had in the past, watching stock behaviors and putting all the puzzles together based on volume, the indicators, the news, and then overall chart patterns. Okay. So let me know if you can see my screen, and I want to share this with you. Everybody can see my screen?
Yes.
Yeah, I can see it.
Awesome. And then feel free to ask me questions because I want some questions here. So because if you're asking questions, that means your brain is turning and you want to get it and understand what I'm talking about. Okay? I want you guys to engage and really get your brain turning on why did I think of whatever I'm about to say and share with you. Process that and ask me how. Okay? All right. So this is PIK, and to be honest, I was trying to, let me share this, maximize it. Okay, so I'm not going to clear my screen. Actually, I'm going to clear my screen. I can always draw those levels later. Okay, so let's say you're looking at the stock. Let's just open it here because this is the data you'll all see before the market open, right? So this is what you'll see. You can look at it in a 1 minute or 5 minute. So you're like, oh my God, the stock gapped up. This is what you call a gap up. Okay, just going over the basic real quick for those of you that don't know. The stock closed right here the day before or whenever the last trading day. And then it opened, let's see, right here, right? It opened right there. So this gap right here between the open and the close is called a gap, right? Because this gray zone right here is this this line right here, this line, this area right here is called the after hour, and then this is called the pre-market. Okay. All right. So now we got that clear out of the way. You'll now understand. So this is a gap up. So a gap up is typically happens is when the market opens pre-market, like around four. There, each stock has different available trading time. Sometimes they're available at 1 in the morning in our time here in Washington, or 4 a.m. Becomes trading hours, or in this case, this was at 5 a.m. And this has news. So here's the news. Okay. Consumer discretionary kid pick shares are trading higher after the company reported a partnership with Disney for the release of Cheaper by the Dozens on Disney Plus. To be honest with you, I'm like a headline reader. Okay. I could care less about what the internal message in that, but that headline alone, it says positive. Partnership, and to be honest with you, trading is all about emotional decision making. Okay, emotional, at least the majority of it. So I know that's positive. So now what I'm thinking is, okay, this that news kicked in, and to be honest with you, and for you, for those of you that are just learning how the stock market behaves, the stock market is controlled by a bunch of bots, bunch of algorithm trading system. They're also called high frequency trading, right? They're all pre-programmed trade execution, just like how you and I would do it manually. Like you buy above the 10 and 20 SMA, or you short when it falls below this consolidation area. You can program that into a computer system to execute those trades for you. And on top of that, you can also program your computer to scrape all the news on social media and all the web world wide web, and find keywords that sounds anything negative or positive. And then that bot would then execute that trade based on that. So what happens is the bot reads the news, right? No human correction or anything like that. And the moment the market opens, it will just start buying or start selling, whatever the news sentiment is. In this case, we all know that that is a great headline, right? Positive news. So therefore, boom, the bot starts buying and just drives the thing up, right? The reason it drives up so fast is because there's also no volume during pre-market. No volume means there's not enough traders in there. There's not enough people. People still sleep, right? And the market's still not open. And most people don't trade pre-market or after hours because the volume goes away, and people just shut off their computer. They don't want to trade anymore, right? So then the computer will just buy up whatever available shares that's for sale, right? So for example, if there's a sell pending order with 100 shares at $10, the bot will buy all of it at $10. Now there's no more sellers at $10. The next seller is at 11, another 100 shares. The bot will buy that too, and so on and so on. It'll just keep climbing until, it runs out of sellers, right? So they buy all that up. So that's the psychology behind this run. Okay? Am I 100% right? I don't know, but that is the thesis behind it. Um, so that's what happened. So now the market the market opens, right here. The market opens based on patterns, right? This is a falling wedge. Let's see here. There's a falling wedge pattern right here. Okay. So in in theory, this is weakening because the sellers are winning. They're driving it up or down, and then the sellers are also trying to buy it up. The buyers are also trying to buy it up because the people are now thinking, okay, there's good news. Let's buy it up. Blah blah blah, whatever. And right at the open, okay, it squeezes up. And so now what's happening is all these people that are buying, right, buying, which is the bottom side, these are all the buyers. They're in favor to the upside. But who is winning? Who is winning in this case, right? The sellers are winning. But here's the thing that you have to think about and understand who is really selling here, right? Who is really selling here? The people that are selling are actually short sellers. Short sellers, for those of you that don't know what the process is, you're betting against the stock to go down. And able to bet against the stock is you need to assign or have a special broker to locate shares, right? To borrow. So you borrow shares from your broker for a fee, and then in return you can have those shares now. So let's say you borrow, 1,000 shares. Now you have 1,000 shares in hand, ready to deploy, and you own them. So what you do is you sell it into the open market, right? For the high price. You sell it, let's say for 340, and your goal is to buy it back at a lower price, right? That's what you call shorting. It's just the opposite of buying low, selling high. It's now selling high and buying low, and you keep the difference, right? And so what happens is the the short sellers are piling on, and we know this. Short sellers are piling on, and they want the stock to collapse, to just fall down on its face, scare all the buyers. The buyers goes away, and they keep dumping into um, nothing. And most news happens. It does that, right? Pre-market gap up, and then it just sells off because this is also could be um, like a pump and dump kind of news, right? It's a false news, and they just wanted to hype up their stock and sell a bunch of shares from the insiders, okay? And that's another topic we can deep dive into and talk about all day. But anyway, so what happens is it it spikes up, and this zone right here, all these short sellers, once they hit the panic button, they have to buy back their shares to close, right? To close because they sold into, they have to buy back their shares to close the position. Well, what's happening is when the stock goes against their trade, now they have to buy it back. When they buy back their shares, they become a momentum to the upside as well, right? This is called a short squeeze, okay? And now what you want to do is if you draw a level here, if you draw a level here, this is a pre-market high. Pre-market highs based on the past, this is basically where all the stop loss orders are assigned. And so when it breaks above that, all the stop loss orders will get triggered. Okay. And then we can talk about another, you know, how the hedge funds and the bots can see uh, stop loss orders hanging out right here. Like there's literally, they can see all your stop loss orders, and what they'll do is they'll trigger those, and then you end up getting stopped out. Okay. So I see that, and I didn't trade this. I didn't trade this yet, and I wanted to see the behavior of like, okay, is this going to be a pump and dump? And it started selling off, right? Started selling off. And we talked about the 50% ratio. Okay. We talked about the 50% ratio. Once the stock makes a high, okay, and you draw it from your previous low. I think I identified it from here. That's what I did. Identified from there to this low. So the rule is when the stock makes a run, right, it makes a move, and it found its high, which is this was the high, and I wanted to know what it will do the rest. So hang on, what's happening here? Okay, no, that's right. I draw it from the top. Try to remember what I did. Okay, so I draw it from up there because it established this high and then it started making low. So now I'm expecting I need this level to get taken out to make it to make sure that this is a confirmed weakness. Okay. So it did take it out, right? Because if you draw a line right here, it took this level down. Now you have a downtrending. Now the sellers are winning. Sellers are winning. And the 50% rule is if that 50% breaks, it'll continue down. That's my opinion. But majority of the time, 50% will hold and then bounce, right? And then so the level I'm looking for is this area right here. This becomes your major resistance level because this is where everybody wanted it to come down. Now, if this level is breached again, all these people that are shorting is now in basically sweat mode. They're like panicking. They're like, oh my God, like this trade is going against me again. And they probably double down right here, right? And then now they have a massive position, and then they got comfortable here, and they probably added some more right here, right? And so what's happening here is it's building up pressure. All the short sellers are building pressure. Now, why do I think short sellers are building up right here? Well, for one, if you look at the data on this particular stock, is let me see if I can pop this out. Okay, okay. Let me know if you can see that. Okay. So look at this. It says the float, which is available shares to trade for the public. It says 341,000 shares, which that sounds really low. So I'm just going to ignore that because I couldn't find any more accurate numbers. But the shares outstanding, which is what the whole company has in hand overall to have, the company hold some and have some available for the public to trade and exchange, 7.6 million. Anything below 10 million shares is considered a low float, right? If you look at like Tesla and Amazon, they have billions of shares, billions. That means there's plenty to go around for everybody, right? The stock market is all about supply and demand. And as soon as you understand that, then you can understand what the behavior could be based on the stock market, right? Or the news. So 7.6 million shares outstanding, and I know there's probably half of that available to trade. So in this case, right? In this case, I know that short sellers are pounding on this thing to go down, right? Pounding on this thing to go down. So the psychology behind the move too, and there's another video on a separate topic that when hedge funds and large institution traders get in on a trade, what they'll do is they'll buy it all up, right? And then they have to shake all the other players off. So what this does is all the other players that are long, they'll shake them down because now they're in profit, right, for so long. And then now they're shaking them out. They're making them come down. They're like, oh my God, the stock's coming down. I got to get rid of my position before I go down here again and lose money. So what's happening here is they'll buy up all those shares, right? Because there's not enough available to go around. They have to shake, it's called shaking the tree. And You have to understand that by its behavior. Okay? So look at these red candles. You see how big these are, right? This is how big these are. But then they recover it back up and they slam it back down. Recover it back up, slam it down. Recover it back up, slam it down. Now that should scare off a lot of buyers, right? And then entice more short sellers to pile on. Like, oh my God, the stock is weak. Typically, when the stock is weak, it keeps going down, and then more short sellers pile on and pile on. And that's what's happening here. But one thing that showed you after finding out the 50% level was holding is this zone right here accumulated, and then it popped up, and then another zone accumulated. When this happens right here, guys, when this happened right here, this is literally recipe for a squeeze, which is what you see now. Because what's happening is, again, short sellers was comfortable. They got in, they start shorting the stock, they load it up some more. It pops up, and typically a tease pop like this, a tease pop and a drop, it gives them hope and then anxiety. Gives them hope. It gives them anxiety when it pops up, gives them hope again. So they keep building position here. And the reason I share that with you because I was that person. Mentally in the past, I was just like, oh my God, the stock needs to dump because it's a scam and blah, blah, blah. I'll come up with whatever million reason why I'm right and the stock market is wrong. Okay. And so I've learned that in the past and I've lost a lot of money trying to short setups like this. Okay. So now that I've learned, I said, oh, I've seen this play before. I've been on the other side of these play before many, many times. I've missed a play of the run, but this time I wasn't going to miss it. So I said, okay, this accumulation right here, right, is about to pop. So this whole area, okay, this whole area right here is loaded with short sellers. And how do you close a short position? You have to buy it back. Now, if you buy it back with all these people that are short, they become fuel to the upside. Okay. So when key levels break like this, I always talked about like you need to see volume, right? I really emphasize on that. You need to see volume spike for it to be convincing and it has to break. It can't just be little tiny grind like this little guy's right here because that's a tease. A real squeeze will do a big fat red candle. And what you want to do, what you want to see is consolidate back down to tease again. More short sellers. They're like, oh my God, it popped up, short squeeze, and then they'll get back on again to short because now this is the level, right? This is previous high level, and they're gonna be like, okay, previous high resistance, blah 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 blah. They pile in more positions, and then it holds. And what you want to see is, does it align with your indicators, your 10 and 20 SMAs? Okay, and it did hold there. And so the next level is right here. And the same thing you want to see is a big volume spike. Okay, you see that volume? Okay, I literally watched the volume on this and me and Alex was trading. I was like, watch the volume, watch the volume. It needs to rip through here to prove itself that this is a squeeze, not a trap. And the volume spiked. And I called Alex when it was, what was it, 340, like right around here. And then I loaded up at 340 and 350, and I explained to him, hey, Alex, this is a good trade, A plus setups, and here's the breakdown and what I just explained to you about the shorts. And now let's go further into able to ride this, the next level of analysis. Okay, so I zoomed out and I go, okay, how can I support my thesis on here, right? Because we just read all this movement, and I'm like, okay, I think that's what's happening here. Now let's have a bigger supporting thesis if it's true or not. So what I did is I went to a bigger time frame. Okay. I went to the daily. Okay. So let me zoom out here. Okay. So for reference, this blue line right here, this is called your volume bar. Okay. And this is a volume bar. Okay. Look at what I saw here. So before the end of the day, this was only at 70. So in the upper right hand right here, let me see. You'll see the volume. Where's the volume? Oh, right here. So right here. You look up here. Man. Yeah. Okay, look up, somewhere up there on that arrow. Okay. You see the volume? The volume says for the day is 124 million. Okay. Before the actual squeeze happened, it was at 70 million. Okay, 70 million. Now let me put that into perspective in comparison. Here's one volume right here. This is a tall, and the rest of here on the left, there's no blue line, right? No blue line at all. Look at, you see the volume? 27,000, 35,000. And let's take a look at this big one right here. It says 30 million volume. Okay, 30 million. That's good, right? But look at the price point. The price level then it was at about $6, right? Okay. Now let's look left some more. Okay. Let's look left. Let's just zoom out. Like, do you see any volume bars here? Zero. Zero volume bars. Like the volume traded 36,000, 6,000, 15,000, right? For a stock to go from a couple thousand and suddenly go into this area right here, 20 million, you're like, or 30 million, you're like, okay, what's happening here? And then they sold off, but look, there's no volume, right? No players. Until this day, with news, right? It's a good news, good headline, and it's a short float, which is there's not enough supply to go around, and there's a high demand. 70 million shares traded, right, before their big run, and there's only 7.6 million shares available. So what does that tell you? There's a lot of demand right now, okay? And to tie that into um, perspective back to the chart, okay, back to the 1 minute, okay, maximize. Back to the 1 minute, this level held. With 70 million shares traded prior to the run up, there was a lot of buying going on here. A lot of buying and a lot of short selling. But the short sellers, right? They're not winning. The only way to drive the price down is somebody actually selling real shares and somebody short selling, right? The stock. But it's holding up. So now you have all the short traps right here, and all they had to do was trigger their stop losses, and it was going to be a panic run to the exit. And that's exactly what happened. Okay, we loaded up at 340 and 350 after I told Alex all that analysis, and I said, hey, take a look at the stock. This is what my I'm thinking of. If you like it, you can buy it. And he was like, how much do you have? I'm like, 10,000 shares. And that's a lot for a 350 stock, right? And um, so he came back at me and said, "Hey, I got in as well." And then I wasn't even in my computer anymore because I trust the setup so much. I just walked away from my computer. I went made some breakfast and walked away. And Alex would call me, "Dude, the stock's popping." I was like, "Okay, that's exactly what I expected." And he was like, "Should I sell?" I'm like, "Well, it's gonna go a lot further than you think. This is just the beginning of the move because it was like the first pop was, let's see, right here. So it was we're in at 340, right? And then it pops up to 360. And he was like, "What's target?" I said, 430 is your first sell. 430 is your first sell because that's your previous high. And I always know that it's gonna pull back from there for profit taking and more short sellers driving it down. And then 430 came. Look at this, right? 430 came. We literally hit the top on this one actually. We exited. It popped up the second time. I said, don't worry about it. Like it's gonna consolidate. And then if you apply the 50% ratio again on here from high to low, and then we should hit about 50% for the second run. Okay. So 50% is just remember that number right here. And then we're gonna go to the right some more. And I told Alex 380. We hit the number 380. We loaded the boat again, and he's like, "Well, what's the next target?" And sometimes I don't know how far it's gonna run, and so in this case, I used the Fibonacci, which Brian is really good at using, and he's BMADS on here for those of you that don't know. Okay, so I said, okay, I'm gonna use the Fibonacci on this one to give me levels. So the Fibonacci lines here. So what I did, I didn't want to pull from here, right? Because I wanted to see uh, more closer levels, right? Because I wanted to be conservative. So I drew it from here to this low. Okay. And so I told Alex, I was like, okay, 495 is your next target. 495 right about here. And so we rode this sucker up, the squeeze. Actually, dude, I was actually was bummed out because what happened, Alex? What happened to this one?
I sold, and it continued running.
So he sold right here. He was asking me, what should we do? What should we do? I was like, well, it's stalling. Here's the possibility. Here's the possibility. This could reject right here hard, and it could flush like hard back down to this this area right here to retest. And he was big profits already from down here or from here from that dip buy, and he sold right here, and I held on. And right a few seconds right when he sold, and I told him, dude, this is the beginning of the move. But that's fine too. He locked in his profit, and it ripped up to 495, which I mentioned 495 was target. I locked in profits right here, and I think we bought another dip. It was smaller position. We bought the dip here, and then we sold for. No, we didn't ride the rest of this, huh?
No, we didn't.
Yeah,
We were watching it. We're like, fuck,
yeah,
why didn't we stay in there?
yeah. We missed this whole entire run, but we loaded up so much down here that this profit gave us the numbers that we were satisfied with. And from there, we don't want to chase this move because the move to the downside is severe. It literally goes faster on the downside than the upside. Okay, and it halts and it skips levels. It goes from here to here to here, like fast. Okay, and so we didn't touch that after that. We booked big profits and we just watched it here. But then the next move is wait for the downside to rebuy, right? And I'm like, okay, we need to figure out levels for the rebuy zone. And all I had to do was that my process is find the high, right? And find the low or where it previously moved. It was I went from here. Yeah, it was right here. So I did that. And then again, the 50% retracement because this was the low of this move. Actually, this would have been the low right here. Let me move this. So we go here and this low right here. This was the low. Okay. So again, 50%. Okay, 50%. This is why it's gold because that is the golden number right here to really pay attention to the stock behavior. 50%, we called it out. And right here, what I was saying is I want that to hit to these levels, but I don't want it to bounce up too soon, right? Because if it's a chop down, then it's not the bounces is not as good. And so we waited patiently. Originally it was 495. 495 was the entry, but it bounced before that. So we're like, you know what? We're not going to chase. We want to be patient. And 460 was our last target. Actually, 465. And that's when we got in. And I told him, it's like, honestly, I'm comfortable in the stock that based on this behavior, as long as it repeats this behavior, it touched the 50%, which is what it did here, and then pop up. That proves that there's buyers still wanting this. And what's happening here on this downside, guess what? Is repeat the same behavior here. Short sellers are getting comfortable again. This is the final run, blah blah blah. That is literally the talk in their head. And I've been that person that, oh my God, this is looking weak. Now I'm gonna short it. This is overextended. Um, I'm gonna bank on this, and it should fall the 50% ratio on the bigger picture. I'm gonna clean this up now because it looks like shotgun blast. Um, Overall, the 50% ratio is from the high to this low, right? So ideally, traders are thinking it should retrace right here. So shorting right here, and guess what? It did not touch. It's far away. Tomorrow, this could trace right here and hold, and I'm still be okay with it, right? As long as it doesn't break. Once this breaks, and then you're 50% on the other setup right here, then it's further down here, right? So these are the levels that I would respect and pay attention to. Okay. So in this case, we loaded the boat at 460 area. And then actually Alex made a nice profit selling into this move. I think you sold at like what, 525, 530?
I sold five. Yeah, 530
It was
something.
5:30, I think. I was at the gym already. But yeah, he we booked the profit again, and I'm still holding like 3,500 shares on this. I didn't want to go massively too big because again, it's you have to consider that this could be exhausted already and it can retrace right here. And I don't want to be fully loaded and give back my profits. Okay? What I can do is I can always add when it proves itself tomorrow, right? If it does dip here, and then I'm going to watch its behavior same way here, right? You want to see consolidation. You want to see consolidation and then a bump up, consolidation. These short sellers right here that are trapped, they're fuel to the upside. Okay. I want to see the same behavior right around this level tomorrow. But I'm guessing this is probably going to be, honestly, my high expectation on this is $10. Here's, or 8. Here's why. Um, let's see, target to the upside. Let's go on the daily. Okay, so now there's the daily, and here's your candle right now, right? So we're gonna do our levels. So here's resistance, and then here's another resistance right here. Okay, so right now it pushed to this red zone, right? It got rejected. The reason we know because the candle closed right here, right? That is the body of the candle. It closed up here. This wicks right here, it told you that it ran up and then the sellers pushed it back down. Okay. But overall in this day, the buyers still won. Okay. The buyers are still winning. And zooming out, oop, there we go. Zooming out, anticipated that this zone right here was going to be if it goes inside this body of this zone, it was going to be chop because behavior wise, it's chop, 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 right? So it's gonna have a struggle to try to get through this. And plus, this is many days of consolidation. In order for this candle tomorrow to blast through that above all this is you need more fuel. You need what's fuel for this particular one? More short sellers. Okay. So what they're gonna do is they're gonna paint the pictures of this stock getting weak, but then they're gonna miss the read. They're gonna miss the read of the consolidation that we saw here on the 1 minute or even the 5 minute. If you don't identify these, you become the fuel. Okay, you become the fuel to the upside because short sellers get squeezed, and this thing will drive it up. So what they need to do is they need to make this thing look weak to the $4 area and hold. If this thing holds, then it's gonna confidently have plenty of short sellers fuel to blast through these zone right here. And my target is $8. And I have a pending order to sell at $8 right here because I want to sell into the strength, not into the weakness. So when it gets up here, I guarantee you there's going to be more short sellers gonna drive this down. And who knows? They could be done, whatever their agenda on the backside, they could be done here. They could be satisfied to sell into the eights and average, maybe they're unloading, couple million shares from the insiders. And this is exactly what you'll learn as well is whenever a stock pumps like this, trust me, the insiders are licking their chaps to say, I'm about to sell a million shares of my stock, you know, position or award stocks, whatever. They're going to sell into that move. And then from there, once the buyer disappears, the real buyer disappears, and the short sellers actually start piling on, right? And they're actually the whoever's manipulating the stock is actually now selling, right? They're now selling, they're not trapping people anymore. And this is literally gonna look like this. It's gonna look like this. It's just grind, 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 grind. You're not gonna see a consolidation sideways. You're not gonna see a box, consolidated area like this. Okay? Keep that in mind. Whenever you see a stock like this, and it holds a key level, just know, put the recipes together. Is it a short float? Does it have positive news? And what is the volume looking like? And if all those align in your favor to the upside, just just know that is the possibility. It's not always going to happen, but the probability of it happening is pretty high. So your risk reward ratio is pretty good because if it did go down, it's going to be a grind down. If it did go up, it's going to take off like a freaking rocket. Okay. And so that's how I was able to anticipate that this was an A plus setup. And I was willing to risk, again, I was willing to risk and accept how much I'm putting in could possibly be a loss as well. But based on my experience, the payout was greater. So, and that's how you have to, I'm not encouraging you to size up on this kind of setup, but just know that, you know, it's a high risk, high reward, or more like a low risk, high reward because this is an A plus setup. Okay. And I know that if it broke this level right here, so let me just give you this look as well, just to give you the what happens if it doesn't work out, TJ, you know? So these levels are identified, right? And this level is identified. So in this case, I've already determined I'm already willing to accept that if it falls below this zone right here, right? I was gonna willing to take the hit because this little drop right here was gonna be maybe a $3,000-4,000 loss, and the upside was 10,000 plus, right? So I was willing to take a hit below this, and then what happens? What I'm looking for below that is a big slam down, which is what these candles are, because what happens is all the longs, all the people that wanted to go long are now panic selling because now the trade is going against them. It's the same scenario here. All the short sellers are in panic exit mode. Here, if it falls below on a downside, the sellers, the long players, they need to sell, right? They bought low to sell high, but now the stock is going lower. They want to sell at a lower price, which drives the price even faster, right, to the downside. So that is the behavior if it falls below here, because now this gray area becomes the ceiling. So even if it did pop up, it's likely going to reject because that is a resistance. That is the behavior of the stock whenever it hits a ceiling. Bump your head, you duck down, and that's what the behavior does. And then what happens here too is all the buyers are scared. So therefore now you lost your buyers. Now there's no more buyers to help you push it up, and now it encourages more short sellers to keep selling it. Okay? So behavior wise, if it falls below that, I'm out. I don't touch it. I wait for another setup, which is this type of consolidation, and then quick break to the upside. And that concludes that A plus setup and how I was able to identify it. Um, Again, this is not a 100% guarantee, but your winning ratio and the risk reward is it's in your favor. And then of course managing your risk and how much you're willing to lose. All right. Does that make sense? Any questions? Does that make sense to you? Is it good?
Hey,
Really good.
TJ,
Yep.
that was a great breakdown. Question I have is, I mean, this is kind of the type of place I look for options to, the consolidation plays, but when you talk about it in more like these slow float type patterns, the example you just went through is essentially like a short squeeze. But let's say that it's the opposite and it's also consolidation and it's a bull trap. Like, how do you, as a trader who's not really short or long biased and you're just trying to play the trend, what signals indicate to you that it's a higher probability of it being a bull trap than bull trap versus a short squeeze,
Okay. Yeah. So again, this is why you identify your stop losses too, right?
right?
And because we don't know the exact setup, but because of the news, because of the short float, there's just more short sellers in trouble here than the longs. The longs is not really in trouble because one, there's got good news, right? There's more encouraged positive buyers, right? So in that case, and it's showing strength to the upside. It's showing strength to the upside, and remember, it didn't fade below the 50% that we initially wanted to. So below the 50%, it discourages all the buyers. Okay. So with this trend right here, this was a clear path that buyers were winning. One, because the news supports it, and two, there's low float. So people that understands floats already that the possibility of this squeezing fast is in your favor, right? So that's how you can do it. When it comes to large caps, with billions of shares, there's really no probability because of a higher squeeze because There's billions of shares available. There's plenty to go around. There's nobody really in a panic mode because to move a stock, for an example, like this stock is what is the company value on this? Hang on, let me look it up. And you can do this on your phone or whatever. So the market cap on this particular company is 36.1 million, and this is after the run up. But before that, it was probably two-thirds of that, right? So $36 million valuation. To double a $36 million company is much easier than to double a Tesla company, right? Tesla is worth whatever 1 point whatever trillion dollars. For a Tesla to double that, you need to bring in 1 point, let's just say 1.5 trillion dollars to double that company or to even move a percentage. You see what I'm saying? You need a massive amount of money to move that company to have a real squeeze, okay? And to to double a PIK company, you only need $36 million and boom, what is that? For a hedge fund, that's a drop in a bucket, right? And so these are the kind of recipes that you need to, and you will slowly learn and understand and put these pieces together to have this kind of results. Does that make sense?
Yeah, it does.
Okay,
That was a great breakdown. Thank you for that.
you're welcome.
And I was gonna say for large cap, you really have to follow your like 20 SMA and cloud, or you're just gonna get faked out.
Hmm.
Yeah, and I think that's why I like the large cap stuff too, because you know, for me personally, like this style of trading that TJ does here, it's really difficult for me to manage it emotionally. So even the large caps, they have their random wicks usually in the morning, but it's not these crazy,
Hmm.
low flow type,
Well,
very manipulated type trades.
yeah, well, in on large cap short squeeze, it happens too, but you have to be more fundamentally engaged, like Tesla. Like Tesla was the number one shorted company, right, in the country. And how do you find that out? You can look up, there's data providers out there, subscriptions. You can do that. You can even look it up on FinViz, like what is the short interest on Tesla. When before Tesla ran up, right? So let me show you what Tesla looked like. It literally looked like a small cap short squeeze. Okay. So let's see this and show you in the daily. Look at this. This literally this literally looks like, guys, the pattern I just showed you on a small stock
Yeah,
is exactly the same. Look at
yeah,
this. Okay? Like consolidation, boom, squeeze.
I was gonna say to ETF, if you pull up your Thinkorswim app, your phone app,
Hmm.
there's a put call ratio on there, and it will tell you how many puts are open compared to calls.
Yep.
So
That's another way to do as well. So Tesla was also a heavily shorted stock because nobody believed that Tesla would succeed, and a lot of these hedge funds was like, oh no, your company is overvalued, which is true, and this is why these low cap stocks or small cap stocks are easily manipulated because they're you can double a $30 million company, right? Easily. Well, when Tesla doubled in value, they're thinking the same thing, like, oh my God, this is overly, valuated. Let's short the F out of it. But guess what? Tesla fundamentally proved everybody wrong that they're actually a good company. So now you have billions. Now we're talking billions of dollars short, and they set it up, right? And then you have this look at this run. This uptrend right here is literally when it starts doing this, right? You have to be careful. These levels get triggered. It's the same concept. Look at what happened when it broke out right here, right? Look at what happened right here, right?
yeah,
It boosted like a
yeah,
rocket. What's happening in this level? This is what you call the short squeeze. This is a short cover. All these billions of dollars are exiting the door, right? And able for them to exit, they have to buy, and they become fuel to the upside. Okay, so Yes, it's possible on large caps, but rarely happens. Tesla is like a black swan in when it comes to a large cap squeeze.
I just like that stock. The range on the options is so crazy.
Yeah, because it this is like number one in the hedge funds trading. Tesla is like an AMC and GME when AMC and GME was squeezing. This is still the hedge fund world. This is still in play heavily in their books. Like we need to short the heck out of this, or this is gonna be another short squeeze. You know.
There's a double bottom there on the daily.
hmm So
A double top, I mean, sorry.
yeah, that
Yeah, I've been following this thing for so long. I think it looks like it might be on another bounce here if it holds up.
hmm
But tomorrow's Friday, so I'm not sure if I'm gonna trade too much.
yeah. So there you go. That's all you need to know, guys. That's all you need. All right. So any more questions, guys? Was that good? Does that make sense?
That was great.
Yeah, definitely awesome. See that.
Awesome. So now this session is recorded. Be sure to watch it over and over and over until you understand exactly what I just went over and talked about. Because like once you get that and it really clicks in your head, guys, you can identify these trades and it's like printing money. I know people that literally stock that kind of setups and they just print. I mean, I know a guy that just gets in, holds his position, and make millions. And he just that's all he does. He doesn't day trade like we do, but he swings these trades. He's got years of experience of seeing squeezes and news and low floats and cheap stocks. They double. I've seen a stock go 1,000%, like in valuation, 1,000%. And those days will come back, and I want you guys to be ready to identify them and just load the boat. Load the boat at your discretion. All right. Cool. Any more questions before we take off? All right. Congrats, Alex. Congrats on
Yeah.
that.
Congrats to you both. That was great.
All right. We'll see you guys tomorrow.
Right, bye.
Right.
All right. Have a good night.
Thanks. Good night.
Bye.
Thank you guys.